welcome back to Coffee Infused Crypto. As promised, guys, today we're gonna discuss a trading strategy which might set or pave the way for you to start going deeper into creating your own strategies or maybe abide by this strategy, but it will give you a general idea about trading in general and what is the best approach of you starting to analyze how to set up your trades. With as much expertise I have in the field and as much research as I have done, I'm just gonna go through the basic and main 6 points here before I give you a personal strategy as I have been looking to. I mentioned in a video when we deep dived into dollar cost averaging. You will find this video popping up in the right corner. So grab your cups of coffee. Let's talk general trading tips and tricks, and let's pave the way of you starting to explore your own strategies. So I'm gonna go over them in a faster way, in a way go through each point a bit, and then dive into the strategy I was looking into a couple of days ago and backtesting it. So first rule is you need to embrace rejection. So all 6 are related in the psychology of each and every one of you. So it's emotional. It's an emotional game. So you'll find out that the farthest away from any feelings, the better you are. So as for first rule is to embrace rejection. Trading is a probability game, not a strategy, 100% strategy, or an or always winning or always losing. It's a probability which you will lose as much as you gain, and you're trying to gain a little bit more in the process so that your net profit or loss would be in profit. So to accept losses is part of the game, and that is what we fail, and that's what emotionally we're wired to not accept, being in loss. So we either cling on to a losing trade, we defy the rules, we never use a stop loss and, hold on to a trade and it drag us down and down. So there's a saying that once you're a trader and if you keep you start as a trader and you end up as an investor because you wouldn't sell your asset and now you're a long-term investor in it. So this explains it, but this can wreck you on a high leverage. So you have to understand that sometimes you will lose a trade, but any process or any plan or any strategy that you have in play is prone to perform to your favor or against your favor, but has a higher probability of moving in your favor. So the lower probability would be you losing. So you have to embrace that. Rule number 2, you have to be patient and stick to your high probability setup, your trading style. So to each have their own trading style. Some would love aggressiveness in trading, others would love to chill and trade comfortably. Some would love to scalp more, others would love to swing trade. So to each their own style and to their own setups, and what works for me might not work for you. So looking into all of those people who post hundreds and hundreds of trading setups a day and trying to just, get outside of your comfort zone and just jump into someone else's setup without even taking the time and considering it and backtesting it will set you up for failure. So being patient is key. Just wait for your setups to be aligned, and we will see that in a bit. So you want to take the most probable winning trade based on the plan that you have already set, and that might take a while to show depending on the time frame, but you have to be patient and only get in a trade where you have all the signals flashing in your favor. Number 3, never FOMO. Never long this around this area or around this area. You know, like, yeah, you see something pumping and you go FOMO in a trade, you FOMO in a long, you FOMO in a short position. Once the move is done, then it's done. Okay, so FOMOing, and it's from a psychology perspective, and I've did right here, did set a note for it here. So heard the psychologist speaking about it, and we treat it as if it's a threat. So the blood flow would directly run when we FOMO into something. The blood flow directly run from the center of our heads, like the front of our heads, into the back of our heads, from the logical thinking into the mechanism and reaction style. Because, oh my God, I'm gonna lose, you know, on this move. I FOMO in, I jump in. And now you're thinking less and just like flip-flopping in the middle of the sea. So you're just tiring yourself, you're not thinking right, and you're jumping into the unknown. So you have to train yourself to stay disciplined, and we're gonna go over that. Number 4, stick to the process, be disciplined. Your preset rules, 20 to 30 trades. So patience, strategy, and give it time. Test a strategy over 20 to 30 consecutive trades. Okay, be disciplined, stick to your rules, don't break them. Don't say, oh, I lost once, I lost twice, I got stop loss here, you know, I'm gonna start tweaking and changing. The way to know if this strategy or any strategy works to you for in your favor, you risk manage, you start with paper money, you start with very small size, and you test it out over 20 to 30 trades, and then do your calculations and see your net profit and loss based on this. So stick away from emotional reactions and stick to your preset rules and be patient. Number 5, risk management and trading size. So, well, here there's a problem. People just go in with half of their money, you know, just throw everything in, over leverage stuff and all of that. And this is bad. You will burn your accounts as fast as you make 1, 2, 3 gains, and then you burn everything the 4th or the 5th trade you do. So the way I like to address it is the 3% rule, which means I would only get, so if I have $1,000 account to trade with, at any time I would only have one open position, and that would be 3% of the total amount that I'm trading, backed up by the 97%. So that's how I like to do it, and that's nothing more than 3%. So you're only allowed to trade a $30 of $1,000, and that would, you know, have a decent size where if you lost, you're only risking a 3%, you're not burning an account, and definitely you have to keep your stop losses in check, and that is for another video. So risk management is a very important thing to understand and to research before you start trading. Number 6, you have to control your emotions. That's everything based on recapping. All 5 are emotion based. You have to control your emotions. You don't need to know what's gonna happen next, okay, before you enter a trade. Once you start realizing it, that you are a machine, you set the rules, you put the strategies, and you're just applying the strategies that you have put, you'll be in a good place. So you don't need to know what will happen next if you longed here or if you longed here. You don't need to know prior that this move will happen or this move will happen. You don't need to know. You just wait for your signs or signals to flash, your oscillators to flash. So those are like 6 tips that I love sharing, since we're doing a trading video, to emphasize on, so that you would go and expand on those, do your research more, and definitely take them into consideration. So today's trading strategy is based on momentum. So it's best as scalping 15 to an hour time frame. You can also utilize it on any time frame, but 15 to an hour would be a good, a good range to apply this. What you wanna do is add three indicators. The first one would be by clicking the indicators up here and go to type here trend magic. So trend magic by Kivank, or you can read the name here, Osbiligic. I hope I pronounced that right. So you add first the trend magic. So trend magic is a very sensitive oscillator, which will it's a very simple and sensitive oscillator which will determine the trend. So blue as in the trend is going up, red as in the trend is going down. So whenever we're below this line, and this will follow us, right? So as long as the trend is going down, this will flash red. As long as the trend is going up, this will flash blue. Once we cross it, see here, it will flip from red to blue, and then now the trend is potentially going up. Okay, so this is sensitive. This will follow the price second by second. That would be first, which I want to add, and then I want to go back and add CM MACD, CM MACD. Okay, so it's by Chris Moody. So this will show in my lower. It's a MACD, but this will signal you every time we have a cross from bearish to bullish and bullish to bearish momentum. So see green dot here, red dot here, green, red, green. Okay, so every time we're flipping, the MACD will flash a green if we're flipping bullish, and if we're flipping bearish, the MACD will flash a red dot. Okay, so this would be our second indicator, and our third would be CM Slingshot. And this is Slingshot System by Chris Moody as well. So Slingshot System has the same concept of determining us whenever we're in an uptrend. You'll see this green line at the bottom, okay, telling us that this time area or this time price range is in an uptrend, and whenever we start going in a downtrend, the Slingshot System will show us that we are in a downtrend by indicating the red bar in the top, on the top side. And along the way we have this band. Okay, so whenever the price is above this band, it is green, and whenever it flips it, it will become red. Okay, alongside this indicator, the Slingshot indicator will give us arrows. If you notice here, green arrows, okay, signaling us some entry points, and of course it will give us some red arrows, as you can see here, signaling us some short positions. So what I'm looking for is a combination. So all of those doesn't work. Yeah, like the three oscillators on their own are weak. To each, I want more confirmation. So what I'm doing here is I'm combining a triple confirmation system on a momentum of a move. So I want a higher probability by a triple confirmation. So I don't want the Slingshot to only signal me to an entry point, but I want to back it up with the trend magic and with the MACD. So I want to double and triple check my position. So if we come and see, so the way that this thing works is, first of all, if you want to go in a long position, okay, trend magic should be blue. So first point we need, or first signal we need, is the trend magic to be blue with the flash from Slingshot indicating an entry point alongside with a green dot on the MACD with the confirmation of the momentum. So I want all three aligned, and then I would confidently have a higher probability of going into a trade. So the way I love to set this trade up, or any trade, is by monitoring up my lower target here. So my stop loss would be below the support or the lowest wick from the previous action. And I would love to always go 3 to 1, and then you can do from here whatever you want. So from here you can move your stop loss higher as you go, or you can just take profit when you hit the target. This is a different thing. You set up your things, but a 3 to 1 or even 2 to 1 as well would be profitable. But again, if you can go to 3 to 1, you would be set up for a good trade, and then maybe take half when you hit 3 and ride the other, or it depends on your strategy. But the way I love to do it is I stop loss below the lowest point and go to 3 to 1. And if you notice here that this would have hit here, and even if it didn't, it would have been, it never hit our stop loss, and it was a beautiful trend or ride to the upside. So this was one. So if you notice here, I didn't take this one. So this one doesn't count because Trend Magic was signaling us red, and we didn't have a confirmation dot here. So the second one came in with our in check targets. Even if you notice here, then this flashed at this candle, so it confirmed a little bit late. Okay, so I've noticed that confirmation on the MACD usually comes one tick later, but you can always see the moving lines and assume or predict beforehand. If you have 2 out of 3, then the third, like if you see them approaching, most probably they're gonna cross on the next time frame, or this is an hour, for example. So another example here, notice we had the green dot here. Okay, so we had the cross, we have green over blue. So whenever we cross, it's the what is red below blue will turn into green over blue. So we had the confirmation at this point, but we didn't have the entry. But the entry came in 2 hours later with an entry here, blue line here, and a previous confirmation and the green over blue spreading wider, which means we are just propelling in the move. So this would have been a good entry as well. And from here, a long position entry because blue, green, and a green dot. So that would have been a nice entry as well. For example, let's check here. So here was one of the, we have an entry here, right? So we have an entry here, and we have a blue sign, and we have a green cross here. It should be here. So this was signaled as well, and it did a good move to the upside, and that was a 6% move to the upside on this candle. And then, so most probably you would have taken profit, and then the trend just went sideways into a downtrend. So so far sometimes it might go against you, but higher chances of you sticking to all three. Most probably it has a higher chance that it would go okay with you. So if you notice here, we have a sell signal, red band here, but a blue trend magic. So this is conflicting, no red entry point. So shorting here wouldn't have been triggered by all three, and then the price actually jumped in the other direction. So that confirming it not only based on one was a good idea. For example, here red, and we have a downtrend here, red trend magic is saying that it is a red, and we have the red cross around here, and shorting at this area. Then even if this flipped here green, we're still having red, and we already entered, let's say, around this area. And that was a nice 5% move to the downside, and then so that would have been a successful trade as well. So again, guys, this is one strategy which I back tested for a couple of days. I found a decent probability in this working. Maybe it doesn't for you, maybe it does for someone else. Let me know if this was helpful, if this whole video helped you in any way in trading. So leave comments in the comment section below. That will help the algorithm. Don't forget to like this video, subscribe, and share it with your friends. Don't over leverage. Stay safe. Always, if you're training, train in spot. That's 100%. Never, you don't need to leverage. Okay, you don't need to over leverage 100%. You don't need to leverage as a start. Start trading spot. If you want to buy and sell, use those indicators, train yourself, discipline, and then start leveraging your trades responsibly, if you think that you have to. Those would be my advices. You don't need to leverage in crypto, but this is its trading strategy that might help you. Anyways, guys, stay safe, stay crypto, and I'll see you later. Bye bye.